Hello, hi. Today I just wanted to share with you a very interesting uh, points made by some analysts in the market. Of course, majority of the what you call analysts are very bearish about the market. They are basically saying that these are just the beginning of the mother of all crashes, and there are just more and more inflations coming up with energy crisis that are still persisting, as well as the food crisis, um, whereby Ukraine and Russian war are seeing no sign of negotiation for like partition of the countries, i.e. Eastern Ukraine given to the Russians, and but in fact Ukraine are actually entering to become a NATO member, and I think the battlefield will continue on to occupy Ukraine, and of course you got the supply chain crisis due to the uh, Omicron subvariant uh, lockdown, or whether it's intentional or not, we are not sure. But I just want to show you about stocks valuation right now. I want to draw to you special attention to the fear index right now, because Warren Buffett is always of the opinion that you should always buy when there are extreme fear in the market, not when even the wet market fish monger even talking about buying shares. Now I think everyone is moving away from stock as an investment, and so it's actually looking at it as an opportunity. So I want to show you about Facebook. There are just loads of businesses out there at a great reset pricing. Of course, it's good to, if you look at the pandemic crash, it was about 256. Now we are around 255, 155 and 156. This was the maximum fear of uh, the world shutting down and all that. I believe right now the fear is actually definitely not as great as that one, unless war from Russia, China and Taiwan starts. So otherwise, if you look at fear and then you look at valuation of these companies, there are just you can see that they are still in terms of pricing. So, and you can see that for the past uh, 2 years, there's been significant development in Instagram and Facebook. Of course, there are negative downside as well, like their CEO Sandberg leaves the company, Apple putting more privacy protection to their user, so Facebook are unable to access to the data, user data, like their consumer liking or disliking, and then you got their metaverse investments that are like a startup. But then yet again, you can see quite a lot of other good things that's happening for Facebook as well. They're doing a lot of share buybacks, 50 million share buybacks, and they are having another 30 billion coming up share buyback as well. Which are all good signs. It's a cash-rich company. You all need to know that, and it's generating good quarterly profits over around 20 over billion per quarter. Hitting around 100 billion per year. So they are definitely at a low valuation right now. I just want to show you. Sorry, the computer is a bit lagging. About the meaning of valuation here. One second.
today looking at profitable companies in the Russell 2000. So let's take the IWN ETF as a proxy. That's the Russell Value, small caps, obviously, very economically sensitive, of course. Not a ton of large cap tech or work from home in there, but real companies with real earnings, real dividends. The valuation, first of all, the level, price level, has now blown through the pre-pandemic period of time, which probably doesn't make a ton of sense unless you think this economy is worse than the economy of March and April 2020. I don't think most people do. But valuation-wise, Mike, you can now buy those companies at a sub-10 PE. So for all the talk we had about how overvalued stocks were and how big of a bubble the Fed blew in valuations, there are huge swaths of the market where there are plenty of stocks that don't look anything like that environment that people have been describing. So I think you can look at that and say, all right, I get it, tons of volatility, but tons of opportunity. I'm willing to eat a lot of the former in order to have a lot of the latter later on. And then the last thing I would say, you know, the stat that you keep hearing people say on CNBC and elsewhere about this being the worst start to a year since 1970, well, what happened after that? But fast forward 4 quarters from that first half of 1970, and the S&P 500 was up 27%. So, and you go back and look at any first half, and I think we've had probably 6 or 7 first half periods where stocks declined more than 20%. None of them were losers 12 months out if you bought during those periods of time. So that's why being open-minded, even if you accept that we're in a bear market recession, that's why it's so important.
Yeah, so as you can see, of course, definitely buying companies that has real, making real monies, has real assets. I'm not referring to Luna crypto or the Celsius crypto, but all those startup companies. I know we are talking about Meta, which is Facebook's new ticker symbol, and it's definitely something that you should consider to enter at this timing. And this is one of the companies I would definitely be on the number one top 10 list of companies to invest. So yeah, hope you like the channel and the video and you find it useful, and please click a like and subscribe to the channel.